Good morning, good afternoon, good evening. I'm Taylor watching What's Investing, and before I get the video started, I'm just going to talk a little bit about Movember, what I'm doing for Movember, and essentially just the situation we're in here. So Investing with Tom has made a video recently talking about Movember and calling all investing YouTubers to sign up for the team. So I signed up for the team, he sorted it all out, and he's planned some content that we're going to do and some live streams and set up a team for us on Movember.com. And we are margin of safety, and we've currently raised $315 towards the cause, and our team is currently looking at Neil, Tom, me, Michael, Viom, Kelechi, Justin, Hamish and Brandon, and I think there's a few others, 3 or 4 others that are yet to join, and we're essentially teaming up to combat men's mental health, suicide prevention, raise money towards that, and have a little bit of fun while doing it, I guess. Yes, my motivation is my mates, my families, and the men around me, getting more open and comfortable in being open, and I'm going to be trying to kick some bad habits out throughout the month, put on a bit of weight going to university, so I'd like to get rid of some habits of way too much junk food and sitting around not being active enough, and so that's what I'm doing to combat my own mental health and wellness essentially, and being able to talk to my mates more comfortably about my challenges essentially. And so the team was put together by Tom. We're going to be getting into it, and I'll have these links in the description for my page and the team and some of the YouTube channels from the guys if I can find them. I haven't met most of them, and I think I've watched a few of them. I watch Tom every once in a while on videos that I'm interested in. And so every day I'll be trying to do an update on my mow. It'll be quite weird because I've usually gone for the full beard look because my kind of around the lips area doesn't grow that much hair. So I'll be doing a little bit of Googling on what a mow is and what it's supposed to look like. And I guess after a few days or a week, I'll shave an outline and see what I can do with it for the month. So that'll be a bit of fun. So if you're keen to donate to the cause, you can donate to my page or the team, or even make your own and have a go at it yourself. So this is just the wee precursor before the video starts. Going to be talking about our portfolio, our dividends, the usual challenge and stuff. And if you're looking out there for anyone to talk to, just flick me an email, DM me on Instagram, Twitter, anything. Or if you see me in person for some random reason, say g'day, always available. So we'll get the video started. In our last video, we were looking at 227 subscribers for September, and then it moved on to 228, and now we're at 232. So we have gained 4 subscribers since the last video. In the last video I forgot to scroll down to actually show it, so there's a wee mistake there. But yes, that means we'll be putting $4 towards Triple M, our subscriber stock challenge essentially. But also I referred one of my friends to Sharesies, Julian, so I'm going to be helping him out later this week, set up some automatic investments or just see what his plan is really. So that means I've referred him, got $5 from that, and I will match the referral of $5 of my own money. And since this is an American stock, it'll all be in the US dollars just to keep it super simple. So it'll just be $14 going towards Triple M, and that is really bumping up our take in Triple M. We won't be hitting our goal this year, as I did set it a wee bit higher over the horizon than I should have, but that's alright. We're heading towards 2 shares, which is pretty sweet, which means those dividends will be looking really nice coming into each quarter, and they'll be just going up and up and up. So we start off at 22 cents, and now we're moving up to $2, which we'll probably hit in the next dividend payout, essentially, especially if we keep moving up month by month. But yeah, the portfolio has been having really great returns over the month, as I'm sure most of you would know. Tesla has been going insane. They've passed $1 trillion. Their stock price is over $1,100 or something now. I haven't actually checked it today, but it wouldn't have moved since the weekend. But yeah, it's sitting up really high, and over the month it has gone up 44%, and I don't know, since the 6-month low it's up almost 100%, which is just ridiculous, and great for any shareholders. I'm pretty sad about it because I've been trying to put in every week money into Tesla to up my stake. But being a student, having exams and other side hustles and all that, I haven't had too much time to actually earn some bank to put into Tesla, and just been a little bit lazy as well, to be honest. But once that loads, yes, we've been buying heaps, and then it started going up, and then I was just like, oof. Now it's sitting there, and I'm like, do we keep putting the dollar cost averaging in each week? Do we keep putting it in, or do we think that the stock price overhyped itself after earnings and after the Hertz announcement, and do we think it's going to drop $50 a share, $100 a share, or is it just going to sit up there and we won't want to miss out? So I'll be doing some thinking about that after my exams, once my brain's a bit more empty. Be looking at my money coming in and really deciding if I continue increasing my stake in Tesla, as it has obviously increased from my average share price. My cost basis is like $459 a share, because of my Hatch ownership as well. So we are sitting over double my cost basis. So that's pretty insane now, and we have to decide whether we're going to keep buying. So in my next video, or maybe, I don't know, a few videos later down the road, I'll probably talk about this again. I may make an individual one on my kind of decision, and if my investment thesis is the same, or if I'm just going to hold rather than buy. But I think I will definitely buy. It will just be less than 40% of what I was doing currently. But I could be wrong. I'm just spitting shit at the moment, really. So I'll give the portfolio a wee check out now. So if we look at the 3 months, it was just pretty normal trend, and it has this massive bump here where the gains go up $1,000 just like that over like a week or two, which is quite funny to see. So yeah, now we're sitting in a nice juicy 30% return on Sharesies, $4,000. And yeah, so I'll give the portfolio a scroll through. We've hit our goal for Apple. We aimed to get 8 shares by the end of the year, so that is super sick. So we don't need to put any more into Apple since we hit our goal, but we will keep going into it, as we see it being a great company in the future, as it is now. AT&T, we're sitting at 12.5 shares. We've just been putting little bits in there here and there as it's been dropping, as I don't really know how the deal will change the value of owning AT&T. I kind of just held it, as some people were selling at the peak, which might have been smart, and then it dropped, and then I'm taking advantage of this to buy it at lower, because the share is splitting and they're selling their streaming service to Universal, I think, which means they're going to have to cut their dividend by 40 or 60% or something, so this 8% yield is going to get halved. It'll still be a nice 4%, which, like, my portfolio on average is like 1.6 yield on cost or something, mainly because Tesla is obviously holding that down. I think without Tesla, the portfolio is at like 2.5%, 3%, which is nice. But even if this does, like, once it happens, this yield will still be nice to have, which is super cool. It will just be a riskier yield. Yeah, and I'll have to really look into the company that the streaming service is going to, and decide if I want to hold those shares that I'm getting as well. Go back to where we were. Chorus I haven't really touched in a bit, just kind of deciding whether to hold that and Spark and other internet service providers and like networks in New Zealand, because obviously Starlink is on its up and coming. I don't know if Starlink will have more speed. I know they'll have more kind of capability of range, like in the mountains and out in the country and whatever, but in the city the speeds may not be up to standard, so the uptake on it might not be as high as I'd think, but I don't know enough yet and I haven't looked into it enough, so we're just kind of holding that, taking the dividends that we've got, and because if we sell and nothing happens, or like we were wrong, didn't think about it enough, it would be sad to see the yield on cost that we've gained over the dividends being just lost like that. Coca-Cola up to 3.6 shares pretty much. Sitting a nice return, we're just compounding those as well. Any of the stocks that are down in the negatives, I'm buying a little bit more than the ones that are up, just to lower that cost basis and really take advantage of the lows. as I see them being good companies. Fisher and Paykel, we did this a bit when it dropped here. It dropped like $7 a share, so we were like, oh man. So we got in there, and that's a good reason on why we're up. And yeah, they're pretty decent. Where were we? Up here. Still going into our covered call ETF as high yield. Hollensteins we've been topping up every once in a while as it has wee dips like here and here. Just waiting to see if they announce that full year dividend depending on the Auckland COVID state, essentially. Just dollar cost averaging to all of these. MasterCard had a big drop, same with Visa, so I've been topping up my stake there. McDonald's, we finally passed a share. Their dividend had a mean increase of like 7%, which was very nice to see. Microsoft, again, is just doing its thing. So we've been buying that as we decide to, and just trying to take advantage of those huge dividend hikes that the companies have and the share buybacks. Realty Income Corp has a deal that's happening. I think they're buying a company. Kind of forgot all the details out of my head right now, but I watched a video by Investing Sensei, and he was talking about Realty Income Corp taking ownership of a company, and that may be a good thing or not. I'll have to look more into that as well. Tesla, that's the big boy there, so we've been buying that over and over and over, and then it had that raise, so we've put in $18.50 USD in Sharesies, and it's sitting at 3.5, so we've almost doubled that, which is beautiful, and just really what we were aiming for, essentially, with what we had, with our kind of risk preference and everything. We couldn't put much more into it without not being able to sleep at night and stuff like that, and just not having the capital available. So I'm happy with what we were able to achieve, and we'll see where it goes in the future. And same as usual with all these. These three have just been topping up for once in a while because they dropped a bit. Visa here did a massive drop here, and I was quite surprised. I don't actually know what causes this because I haven't been able to keep up with the US economy too much while studying for exams, but it dropped $20 a share, like 10%, and I knew a dividend raise was coming just by the trend of them raising it every 4 quarters. So every 4 quarters, or 3 quarters rather. So I knew one was coming, and they raised it by 17%, the dividend. So that was just a super good opportunity to take advantage of. Westpac recently did its like full year report, and it dropped like $2 a share and announced a dividend of 60 cents AUD or something. So I just put like $5 in there today, just to take that yield on as well. And that's about all we've been up to, really, just kind of spectating essentially while we've been busy. Triple M is now getting up there towards 2 shares. It will be after that order, I assume, maybe just off. I'll give you a wee look at Hatch as well. So back in July of 2020, we bought roughly 2.2 shares. We did it in 3 purchases because after the first one it dropped like 15%. We're like, oh, well, that's good because we just decided to buy, and then we bought another one, and then it dropped another 15% or whatever that made it add up to that. And okay, I've got some more money. And then I did another purchase. This did make me take on more fees, but the proportion was worth it, definitely. And then here I did another buy, and I think it did drop a little bit again, like another 3 or 4% or even more. And I was really wanting to buy more there, but just didn't have the capacity to. And also around some point here, I think Sharesies released US shares availability, so got straight into that, which was very good to take care of. So moving into the actual kind of main part of the video is our dividends for October. So we'll get straight into showing that. So we'll scroll all the way down to our spreadsheet that we could make a bit nicer in time. So over October, we got all of these dividends here. Some of these happen every month, every quarter, or semi-annually. They're all depending on the company. The Global X NASDAQ one is every month. That's a high risk, high reward kind of one. We've got Realty Income Corp, that's every month again. So we're getting $1.60 every month, no matter what now, pretty much. And then all the quarters add up as well. So Spark being a big one of $5, Chorus 3, Meridian Energy 3. So all those New Zealand ones really coming in. And we hit $17.71 in dividends, so almost $18 our guess, and these are what the graph's looking like now. I'm not sure the one on the bottom right is correct. I only just made it about a month ago and haven't really touched it, but I don't actually know what I'm doing, so we'll get there. But yeah, the dividends per month is looking nice with the upward trend. I think that will continue all the way up until January, because I think November and December are also going to be good months. But yeah, so our guess for October was $18 and we got 17.71. So that is super sweet. And we have now passed total dividends for the year 2020 by a huge spot. And we've still got November and December to come. And December's going to be huge. It's going to be absolutely massive as long as Hallensteins does declare their full year dividend. If they don't, I'll be very sad. Very sad. And if they announce anything about it still being delayed in the future, I may have to sell out of Hallensteins, as the main purpose is for that dividend. And if it does do that, I'm 50% up on Hallensteins or something, and that dividend being announced, if it is announced to not be going onwards into the future, the share price will drop a lot, as most people hold Hallensteins for that reason. But that will be a decision I have to make coming into the future again. So yeah, our monthly dividends here, yellow is 2021 this year, and it's looking super sweet. April getting carried by Hallensteins, and then we've got our nice wee staircase of these 4 months leading up. And I'm thinking November may be higher than October, I'm not sure, but I'm going to go for a guess of $20 for November. So we'll just quickly edit that, November. But yeah, in our last video, we had some guesses coming in. So we had Project Fugal, one of our previous winners, guessed $14.23 a few days ago. And sadly, I've beaten you. So better luck next time, better luck this month. My girlfriend Trish guessed $15 and bet both of them this month. $18 is very, very close to my guess of 17.71. So super happy with that. I'm going to go with $20 for November. Again, I always forget to use my insider information advantage and look at my upcoming dividends to do the guess. So again, it may be higher, it may be lower. I don't really have a gauge on it. It's just a hunch, really. And really, the higher my guess, the more hopeful I am, because more dividends is more money, and we love that. So hopefully my guess is right. Or if anyone guesses higher, hopefully you're right, because that is really what makes sense. But yeah, our total dividends is getting up there, and I think for 2022 it'll be really interesting to see where we go and where this just peak staircase can go to. So we're super happy with that. Our weightings, I don't think we updated, but we can see the proportion of Tesla. I haven't updated it in a few days, obviously, almost a month. And yeah, Tesla was sitting at like 36-37% or something, and just the share price change, not even buying anymore, has just put it at a super great proportion here. I think this was last at like $6,000 or something when I last looked. So yeah, Tesla's been on a absolute run, so that's good to see. Dividend growth, I will be doing a dividend snowball video on this, showing the dividend growth, compound investing and some of that stuff in the future, so don't worry about that. And yeah, this I'll be showing as well. I'll do a goal review just before we head into December, the final month. And our weekly costs, we have updated our net worth over time, as I just did a video on that a few days ago, and it's the end of October yesterday, so I updated all the final numbers, and our net worth has been increasing over time. So we've got that student loan, we've got that debt to my dad, and so yeah, we've moved almost from our peak disappointment or peak trough of 21k down, and through investing and everything, we're only at now 16.7. So over time, this will be looking better and better, and I'll keep you guys updated on that. And that is pretty much where we're leaving off the video. I will have a before and after kind of shave thing at the start or end of the video. I'll leave the links for Movember in the description of the video. And yeah, happy investing, guys. Check out the content that's coming up. Check out the fellow investors in the team, and keep investing, keep happy.